Hello, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, more mean reversion cash machine action. The calendar is just chock full. We're working two trades from yesterday. Both pro- they're hanging in there. That's about all I can say. Lockheed Martin just in the last 15 minutes dipped below our put level. And let's see, let me just pull that up actually because it's pretty important. Yeah, we've got a 420 put. We had been holding up pretty well throughout the trading day, and in the afternoon here, let's see, 422, and then in the last half hour dipped now to four below 417. So I'm expecting a rebound here on Lockheed Martin. This is a highly rated stock. It is now way beyond the bounds of 2 sigma. You can see here on this chart, right? This is very abnormal, which is why I like the writing of puts on stocks that where I can get paid way beyond these bounds. So we still have until Friday, 3 trading days remaining, Wednesday, Thursday, and Friday before expiration. So just going to hold tight with Lockheed Martin. Same with Philip Morris, which is actually a stock. I'm going to make a 2 sigma trade on Philip Morris as soon as tomorrow. Look at this, another example of just blowing away 2 standard deviations. And key point to remember is that 95% of the time, a stock is going to trade between these upper and lower bands of 2 standard deviations above and below the mean. And clearly that's getting blown apart here with Philip Morris, which again is also a highly rated stock that I would love to own. So we have a 165 put on Philip Morris. We're still in the money here on Philip Morris, but the options are expiring on Friday. So there's still some premium that needs to evaporate here for this to be a winning trade. Obviously, the calls on both Philip Morris and Lockheed Martin are going to expire worthless. So that goes without saying. You'll pocket those. Uh, we'll see what happens here later in the week and I'll report back, but still expect these to be profitable trades. Now, moving on to today. The first name I want to look at is Capital One. This credit card company is reporting earnings today after the market closes. So we want to get into a Lockheed Martin. I'm sorry, I've got Lockheed Martin on the brain. Capital One. What am I looking at here? I'm looking at the 235 calls, which you can see here again is well outside the bounds of 2 standard deviations above the mean. For the puts, I'm looking at the 200 puts, which again, we're above and well below the bounds of 2 sigma here. So let's write calls and puts on Capital One. It's going to take an 8% move in either direction for us to be out of the money here. So the 235 calls you can write for 30 cents. The 200 puts you can write for 35 cents. And that's nice cash we can put in our pocket. The other name I want to look at is it has richer premiums, and that's GE Vernova. This is a red hot stock. You can see trading closer to 2 standard deviations above the mean until today. We took a step back and look at that's the power of that magnet of the mean here in advance of its earnings report that's going to come out tomorrow morning. I'm looking at really heavy premiums on this one. A 640 call, which way above, right, the 2 standard deviation. You can write for $1.25 at the moment. The 470 puts, which again is below 2 standard deviations below the mean, well below it. And you can write that put option for a dollar. So the 470 puts at $1.65. By the way, I clocked these prices approximately 10 minutes ago. So Don't hold me to these prices, but you should be able to get a pretty rich premium on both the puts and calls for GE Vernova. That's all I have for today, folks. Uh, I'll have more cash machine mean reversion trades for you tomorrow, and we'll keep you updated on the trades that we're currently live with. So take care, everybody, and we'll see you all tomorrow.